Ben Fulton, you launched the Elkhorn S&P High Quality Preferred ETF last month. Why is this ETF right for the current market environment?
Yeah, we were looking for a way for people to really be able to take risk off when they held a preferred portfolio. So there was no investment grade only preferred exposure in the ETF space. So we're delighted to bring this.
And what about the valuations in preferreds right now? Because it's sort of a hybrid between a bond and a stock, and people say bonds are pricey and people say stocks are pricey, but what about preferreds?
Yeah, I think that's one of the things people are looking at is how do I protect myself in case there is a big downdraft, and that's one of the features as S&P back tested this. It took about half the downside risk off the table. So in some ways it makes sense. Improve your quality. Your yield may come off a little bit, but your risk should also come off by a greater mark, so hopefully a better total return.
And what kind of yield are you looking at right now? Because I would think that that's one of the more attractive features. Because we're in a low yield environment, got to pay a fairly decent yield.
Yeah, we haven't distributed yet, but we're anticipating it'll be 5.5%, 6% type of yield. So yeah, very attractive yield, exposure, people that like preferred. So.
And let's talk about the composition. There's a lot of REITs in there.
Yeah.
And REITs tend to get hit when the Fed either talks about raising rates or actually does raise rates. So talk about the composition and how it would react to a rate hike if and when we get it. We'll see about that.
Well, one of the benefits is it's mandated 75% of the portfolio has to be cumulative preferreds. So even if it is a REIT, even if it gets hit, even if a person says, hey, I'm worried about the REIT paying, the REITs have had a very good history of they want to be able to continue coming back to market. They have to pay back the preferred holders, both past dividends and future. So that's right. They tend to have a higher credit rating in the marketplace because they'll do everything they can to defend themselves in the market. But you're right. This has you're exchanging a higher REIT exposure compared to most preferreds have a very high, large bank exposure.
All right. And then finally, you have some MidCap ETFs coming soon. What should we expect?
Yeah, so the S&P 400, which is a very popular piece of the market, about the last 18 months you had some underperformance, but you've seen great performance there. For some reason, the MidCap sectors never came to market. They were orphaned. So this will complete the sector family for, we'll say, the S&P 1500. And we're actually excited about the products, and we're working on some products that will incorporate sector rotation across the large, mid, and small region. So that's why we're bringing it. We're both a provider and a user.
One more question. Do you think anyone's going to buy individual stocks anymore? There's so many ETFs out there. Seems like people just want to buy stocks in groups.
I hope not. I hope they only buy ETFs. But
You're just kidding. All right, thanks a lot, Ben.
Thanks.
And thank you for watching The Street.